Well, good evening. Epstein with your metal market wrap-up, and this wrap-up is your weekend edition for Sunday, the 30th of March, 2025, and we're getting on to 5:30 in the evening. You know, I can't help it. I was sitting here getting ready as I was walking back from the other part of my studio where I'm shooting, and I started thinking of Sonny and Cher, that song, and the beat goes on. I'm not Sonny, obviously, or Cher, and the beat goes on in terms of gold. I mean, it's just where everybody's run. I felt good, at least, that I called for 3,000 at the beginning of the year. Recently, we had on the daily charts where it lost its bullish embedded reading, which often means a run to the 18-day average unless you take out the most recent high. What it immediately did is you'll see in a moment, it just keeps going. So that didn't work at all. Really, bullish markets do it. Now, let me tell you something when you lose a bullish or embedded reading. So let's assume the market's going up on that embedded reading and you lose it. It doesn't mean you're turning bearish. It means you're coming out of long positions. Traders can go neutral. They can get bearish. They can get bullish. If you're in the world where I'm always bullish or I'm always bearish, well, God bless you. I'm not, and when you lose an embedded reading, that can happen. What I do find is in the world of ETFs, when you lose it, you can actually flip around with short or long positions. In the world of futures, you can't. Do you want to know why? It took me now 3 years recently to do it. Leverage. The leverage kills you. So just remember that. ETF, especially if you don't use leverage, a whole different game. All right, let's talk about what you have coming up now. What you have in the morning is the Chicago PMI coming out, and that's at 8:45. They're looking for it very close to what the February number was. The Dallas Federal Reserve will come out with their monthly regional manufacturing outlook. That's going to happen at 9:30. And the figure, by the way, the month before was a negative 8.3. And for those of you that watch the grains, you're going to get your ending stocks, but the big number is going to be the prospective plannings. The markets will rock on that. So now what do you do? Well, let me bring you up to date. President Trump flying from Washington, D.C. to his home in Mar-a-Lago Friday. Things are going really well with Russia. Today's Sunday. I will hit Russia, that's the president talking, with tariffs just as I did in Venezuela if they do anything to not make this peace deal happen. And I will tariff everybody that wants to sell goods in America if they buy Russian oil. So if you think that you have an idea, like the press is saying that he's climbed in bed with Putin, does that sound like it? I don't think so. Israel going after Hamas again, pretty rough time, all right? And they're saying, lay down your arms. I knew that was going to happen. They'd never allow Hamas to just stay there. The smartest thing Hamas can do is leave. It was interesting that there was a protest against Hamas. That rarely happens without people getting killed. I don't know what Israel's going to do with that. I know that Syria, Lebanon, everything's a hotbed in that area, so you got to keep your eye on it. And that certainly is a bid for the gold market. But the overwhelming thing, and you know it, is what's going to be with the tariffs, all right? And we're now at the week where we get to find out. So if you're going to be a hero, terrific. The news of the threat against Russia certainly gave a small bid into the energies and certainly keeps the gold market alive. The dollar didn't do diddly with it, nor the other currencies. I think everybody's sort of going, I don't want to stand in front of this train. This could be a little late in the game to do that. Well, the gold, certainly, here you are, and you're up for the month, 8.66%, and you have the last trading day of the month. Can you get up to 10%? Maybe. When you take a look at how the chart is going, all the way up on a weekly basis, in order to break the pattern, you'd have to get back under right over here. That's quite a ways off from where you're at in the market. The 18-week average is still not above this 28.66 level. That's that break low, by the way. So you're about 40 points from it. So it's really not the best supportive area. It is for an area, but it wouldn't keep the trend up if you got there. And in terms of a break, that'd be a heck of a break, $270 an ounce. The market has locked on, as you can see, on a weekly basis to the Bollinger Band. We call that the Gorilla Glue effect. It's when the market just latches on, doesn't let go. It forces the momentum to what I call embed or lock in. And if you get breaks, the trade's buying it. On a weekly chart, all you keep doing over the past 4 weeks is every week is made a higher high week. It's very difficult to buy into that. When we take a look now at slow stochastic, that is the slow stochastic where you're at. Sorry about that. I thought I pushed it. In the gold-silver ratio, it continues momentum down and prices just hanging now at the 18-week average of closest, slightly over it. You're at 88.62. So the gold is still stronger than the silver, although silver's been trying to play a little bit of catch up. It is overbought, unlike the gold, not embedded. You're at a resistance. You've been there for 4 weeks, the upper Bollinger Band. You have had a couple of opportunities if you wanted to buy long, but you had to do so in an overbought market. In the copper, I'd be a bit nervous here. What type of tariffs, if any, come on copper? And there's massive amounts of copper, according to European trade houses, coming at America to deliver. The discrepancy between European prices, U.S. prices, are 17 to 20%. You can afford to put that copper that's already been graded onto a ship, deliver it against this COMEX copper for delivery. It's not a game you or I could do, but the big trading houses. And, you know, if you're asking me, how are the big trading houses going to do for the quarter? Ring the bell. I think you're going to be shocked at how much they're able to do in this type of environment. Then we look at platinum, which is the opposite. It has fallen back. It is just stuck here between the gray line, the 200-week average, the red, the 18, and the green being the 100. It's just in sort of a neutral territory. Get under all this, and you turn bearish. So the weekly chart here is the one that's the weakest by far. And then when we look at the dollar index, you can see, I don't think President Trump wants the dollar to go up. So I think these policies are meant to break the dollar at this point. And you're not getting the safe haven buying of it. If anything, you're at the other end of the cycle where our Fed holds steady, and that could hurt the U.S. economy right now. And other economies are lowering interest rates to spur them on at this point. So we're at a very big cycle difference at this point in time. Could it all change? You tell me what the tariffs are, how fast they come on, off, and so on. That'll probably be the answer to that. I want to remind you, I'm going to be having a huge sale starting tomorrow. I think it's a 24-hour sale. So look for an email from me. My research for my videos will be cut in half for the price for 30 days. So if it was $7.95, it's going to about $3.95. You can do it for 1 day. That's the purchase. Then you get it, and then you decide if you want to stay with it. Why am I doing this? Because you're going to have so much action this week. I want you to see how we start pulling the triggers in where I can say in my morning subscriber videos, buy here, sell there, do this. And that's where we're going to be. I'm Ira. You have yourself a great evening. I'll catch up with everybody Monday morning. Take care.